George, Inland has been the dominant player in the last several years in the non-traded REIT arena, where Inland has got a broad network of money managers on the street that raise money from average mom and pop investors. They've raised literally billions of dollars. Is that market going to be as strong in the future as it was in the past? Is Inland looking to change the balance between institutional money versus that kind of retail money? How does that look?
I'll take the broad question first, and then I'll talk about Inland. The individual investor, who is our typical investor, has definitely pulled back. The total amount of capital being raised in our world, not just by Inland, but by others who raise capital through this broker-dealer network, is down about 40% from where it was a year ago. However, it's still very robust by comparison to other capital flows. I mean, it was a little crazy what was going on in 2007 and 2008.
How much was Inland bringing in every day?
We had some days in 2007 where we got $50 million in the door in a day.
And that was from in relatively small increments?
That was, yeah, our average investor is a $30,000 to $50,000 investor. So, I mean, we had we closed our cafeteria and hired temporaries and put work tables out there with computers on them, and there were about 40 people in there for about a year just cranking away, just trying to process all the income, all the capital that was coming in. That's over.
What does an average day right now look like?
It's a little hard to tell because and one of the reasons the industry is down is we were running at about 50% market share last year, and then our most recent vehicle, Inland American, that I mentioned before, finished its capital raise in April, and we went for about 5 months where we didn't have a product in the market. So all of a sudden, if your half market share guy isn't there, the industry is going to get smaller. So it's right now I would say we don't honestly know. We're pretty confident because the new REIT seems to be starting on a little bit of a faster path than the last one did. Some of our competitors are doing pretty well in our absence. They've picked up some of the slack. So I think we're cautiously optimistic. Personally, I think this is the best timed opportunity for our sector. This Inland Diversified just coming to the market today is going to have wonderful opportunities to invest in a market where buyers are going to be in charge. But we don't. I mean, we were running steadily at $10 to $15 million a day with Inland American right through to the end. And we'd love to get back to that level with the new REIT. There's always a slow ramp up. It's a very complicated process to get one of these things off the ground, and I don't want to go on too long about this, but first you have to get approval in all 50 states, one at a time. Then you have to get the SEC to finally approve, which turned out to be a roadblock this time. It's never been in the past, but they're kind of running scared, so they were very careful. Then once you get approved by the SEC, then you have to go out and negotiate a separate selling agreement with each of your broker-dealers. And we have 350 broker-dealers out there, ranging all the way from Ameriprise, the likes of Ameriprise are quite large, to ABC financial planners in Jacksonville, Illinois. It's a whole broad sweep, and it takes time to get those contracts done, and then educate everybody and get Aunt Martha in to have her interview and talk about the deal and so forth. So it takes probably about 6 months to hit a steady run. But as I said, we're cautiously optimistic, and the individual investors tend to be, and they're very loyal to us, but they also have tended to be a little more entrepreneurial, and some private investors have been more active lately, than the big institutions.